Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Friday, May 3rd, 5:44 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with the Revere Roundup Daily Market Insight video. Market state, we're in a mild correction. 2 straight days of nice green returns on the indexes, but volume not overwhelming. So if you're following the O'Neill methodology, you can't say that we had a follow-through day either Thursday or Friday, despite the fact that the price action was very strong. But like anything, that's we're incremental investors. As the market strengthens, we add. As the market weakens, we subtract. It doesn't mean that we're not going to do anything because volume was a 0.5% below where it needed to be. That could be a rounding error, frankly. But good action for the second straight day. Check the trend gauge over here. Leaders still flashing neutral. The green sub arrow leaning closer to bullish as we had. I mean, you can't ignore the good price action in the 2121 leaders list. That's for sure. Short term upgrade there from downtrend to neutral as all five of the major indexes recaptured their 21-day moving average today. The slope of the line on, I believe, 4 of the 5 has hooked up, despite the fact that going down to the medium term, we're still below the 50-day moving average. However, mid caps closed basically right on their 50-day moving average. So minor improvement there as well. Also, the 21-day moving average is still below the 50-day. That's not the optimal layout that we want. We want the shorter term above the longer term. But again, like anything, it's incremental and not going to stop us from making progress if we see good low risk entries. Long term, and remember, the market never gets into serious trouble as long as we're above the long term trend. And all five of the major indexes are. So we've got the green arrow there. So bottom line, after the initial positive reaction to the FOMC Wednesday afternoon, we had a late Wednesday sell off all the way down to red. And then the last 2 days, positive reaction in both days for both economic and stock reasons. And things were looking a lot more bleak Tuesday when we had a big sell-off and Wednesday at the end of the day than they are now. And it was just a rally attempt to suck people in. It's very possible the market will do whatever the market wants to do. But we're just not going to sit and ignore this price action, especially when we've got some leaders acting well, not overwhelming, and the volume not overwhelming. Those are two things that you really would prefer to have with a nice rally day like this. But to me, more boxes are being checked on the plus side than they are on the negative side. So let's get right into it. Second straight day, as I said, follow through day price, but not follow through day volume. Speaking specifically about the S&P 500 and the NASDAQ 100. 21 over 21 list, 14 of the 21 positive on the day, up an average of 2.06%. The Big Eight, this is the Magnificent Seven plus Netflix, up an average of 2.3%, all 8 of them positive, and Apple up 6%. This is a big reason why the indexes were up today. Is the reaction to Apple earnings, and the earnings and sales themselves weren't great, but the optimism from Tim Cook and the fear that a China slowdown on iPhones was going to just wreck the quarter didn't come to fruition, and a large stock buyback certainly helps also. RG8, this is our 8 growth ETF composite, up 1.1% on the day. S&P 500 gapped up 1.25, closed basically right there. Attempted sell-off after some economic news at 10 o'clock, but a late morning, early afternoon rally got us back near the highs of the day, minor fade into the close. But all in all, if you were looking for a gap up to completely give it up, that didn't happen. On the downside, RSP, the equal weighted, much weaker, only up 0.71%. So that shows a lack of breadth, and also not surprising with the Big Eight being dominant today. NASDAQ 100 up 2.01%, equal weight up 1.21, another minor disappointment, but again, not surprising. with the big eight action. Dow Jones Industrial Average up 1.2, mid caps up 1%, Russell 2000 up 1%. Minor disappointment here as it initially gapped up 1.7%. So a fade on the Russell, and that is some oil stocks faded, came back a bit during the day, but the breadth just wasn't there on small caps. Although small cap growth did outperform small cap value. That was the case also for mid caps and certainly for large caps. So a growth leadership versus value names today was certainly the case. Global 60/40 stock bond up 0.82%. Not only stocks, but bonds up as interest rates pulled back a bit. And that was on that weak economic data that we'll talk about in a second. In-house GROTECTION up 0.71% as we continue to incrementally add exposure. We'll discuss that when we get to the tail of the tape. So let's go to the S&P 500 now. You can see here the clear gap above the 21-day moving average, which now has hooked up and has a positive slope, ran right into that 50-day moving average. That's going to be certainly a spot where the market will eventually need to decide if it's going to fail there or get through there. One serious possibility is a minor pullback to the 21-day moving average early next week as it's hooking higher, bounce at that level, and then retake the 50-day moving average. That would be the best case for the bulls. For bears would be a failure at a meetup of that 21-day moving average. Note the close today is the highest in 3 weeks, all the way back to the breakdown day on 4/15, which I believe was exactly 3 weeks ago. No, not quite. It was almost 3 weeks ago. This was the 12th was a Friday. The 15th was tax day when we broke below the 50-day moving average. And here we are back at the 50, and notice the slope of the line never rolled over. It flattened, I think, for a day or two, but never quite rolled over, indicating that the strength from up here was enough to hold that higher, and the underlying support at the 100-day moving average provided enough support for price to hold and or bounce, especially at this 5,000-ish level, to get us back to where we are today. So yeah, I mean, you can't ignore the fact that it's the highest price in 3 weeks. You can't ignore the fact that we're back above the 21-day moving average and the slope has rolled up, and some decent action out of leaders as indicated by our upgrade of the leadership and also the short-term trend. Also want to make sure that we show, with it being Friday, the weekly charts. So let's get rid of this. You can see the weekly charts back here for the week. The S&P 500, which started out with a pretty tough Tuesday and Wednesday, rebounding Thursday, Friday to be up for the week by 0.55% on the back of a 1.3% gain today. So let's move on to the NASDAQ 100. Same situation, recaptured the 21-day moving average with enough strength to make the 21 hook back up, ran into the slightly declining 50-day moving average, up 2% on the day, up 1% on the week. If you look at the weekly chart, very clear, we're running into the 10-week, same as we are on the 50-day. So same situation next week. Any pullback you want to see contained by this now uptrending 21-day exponential moving average, with the thought that we'll blast above this 50-day moving average. That's what the bulls want. And again, the bears, a crash back through the 21, meaning the 50-day overhead is just too much to overcome right now. This is also coincident with the bottom of this congestion here. So that's adding additional resistance in along with the moving average. Onto the Dow. Dow clearly back above the 21-day, which is either flat or hooking up here, ran into the 50-day, clear gap up, ran into the declining 10-week on the weekly chart, but on the week up 1.14%, which is basically what it was up today. So some positive action there as well. S&P 400 mid-cap index has the steepest slope from a 50-day moving average standpoint and closed just slightly above there, just slightly below on the weekly for the 10-week. So breakaway gap there. Same situation with the 21 next week, up 1.2% on the week. So pretty good action there. Russell 2000 index got back, gapped above, but came back below the 50-day moving average, which is flattened out now. But again, above the 21-day, and the 21 slope has hooked up 1.7% on the week, up 1% on the day. So really, we're looking at the same setup on all 5 of the indexes next week. What happens when the uptrending 21-day moving average runs into price? That's what we'll be monitoring. So that's the 5 major indexes. Let's go to the VIX. The VIX down sharply today, breaking the 14 level, down 8%, in line with what the market was doing, and all the strength late last year and early this year in the market coincided. You can see the S&P 500 line up here. It coincided with the VIX being below that 15 level, and we're also below 14 and halfway to 13. On to the dollar. Dollar bounced at the 50-day moving average. Initial weakness today got slightly stronger as the day went along. How did that impact the precious metals? Gold just barely down on the day, below the declining 21-day moving average. Gold stocks, the GDX down 0.42, but bounced at its 21-day moving average. And silver down 0.6, holding at the top of this flat base breakout. Bitcoin, strong day today, up 4.7%, still below its 21 and 50-day moving average, and down 2.5% on the week. On to bonds now. The broad BND up 0.51%. Yields broadly lower on the week. Bonds yields broadly down as the price was up 0.9%. TLT, the long bond, price up 1%, reclaiming the 21-day moving average, which it had been below for 4 weeks, up 1.8% on the day. So you're going to see yields on the week lower by 2.5%. This is looking at like a failed breakout now. The next level below consolidation, we've broken below that and below the 21. This is all good news for stocks. And the 10-year, the TNX, down 1.55% today, down 3.6% on the week. Again, that's yields. So failed breakout, failed below this consolidation, and below the 21-day moving average. Again, that's a positive for stocks. All right, those are the charts for our inter-asset correlation. Let's go on to the tail of the tape. 2 things. First of all, the jobs report, the NFP report, very weak today. 175,000 jobs added versus 250K. So this added to the pre-market gains, which were already higher on the back of the Apple gap higher. 10 o'clock, ISM services were weak, but prices paid were above expectations. So this is inflationary. This is economically weak. For a while, right after 10 o'clock, from 10 to 10:30, we pulled back. But we held the 5,100 level, tested it twice, and then we're off to the races for the rest of the day, reclaiming those losses. Let's look at a 5-minute chart here so you can see what I'm talking about. So here's the gap up. A little bit of a pullback, but then higher highs, 51.39. This was right at 10 o'clock. Then we sold down when that report came out. Attempted to rally, pulled back again, undercut it just by 1%, and then this nice trend up from 51.01 to 51.34 over the next 3.5 hours before a minor fade into the close. So that's economic data during the day impacted that pullback, but it wasn't weak enough to overcome the overall strength on the day. So day count, 2 days up, 2 days above the 8-day exponential moving average, 1 day back above the 21. Expectations flipped to positive with this being above the S&P, the 21-day on the S&P and the NASDAQ 100. Always important to monitor this opening 30 and opening 60 minute range, as well as what happened overnight. We were at 50.84 when the jobs report came out, and then we blasted higher after that. But the opening 30 and the opening 60-minute range tells you who's in charge as you go throughout the day to see whether it's broken. And when we tested that low and held and we're heading higher, we didn't quite break the opening 30-minute to the upside, but we got within 5 points of it. And holding the bottom of that range gave us um, more conviction to put a little bit more risk on. Although the volume tapered during the day, if the volume was extremely strong and we saw a lot of further price progress from the gap up, we would have added even more exposure. But the way it was with us being above the 21 and the 21 curling up, here were the portfolio changes. Well, let's hit sectors first. All 11 sectors up: semiconductors, builders, solar, tech, and biotech to the downside, cybersecurity and gold and silver stocks. So portfolio, oil's weak. We got stopped out of the second part of our VDE. That's a broad energy ETF for a small loss. We added to First Solar as it gapped up and TAN was acting well. And we added to UPRO late in the day when we realized that the pullbacks were holding, and we wanted to be at least back at 0.4 beta exposure for the S&P 500. That's the minimum that exposure that we want to have on as long as we're above the 21-day exponential moving average. So if we hold that, that'll stay on. If we break it, it'll come off. We also bought FNGU because of this chart. This is something I keep on my main screen. It's the FANG Plus Index, the 10 FANG stocks, and showing serious relative strength over the last 2 weeks and clearing the 50-day moving average and the 21-day moving average. This is what we want to see the S&P 500 and the NASDAQ 100 do next week. This exact pattern: get above the 21 and clear the 50-day moving average, and then hold them on any pullback. You can see that relative strength acting pretty well. It's right where it was when we were in this consolidation area over here. So while we lagged for a bit here, pulling back, we regained it most of the past 2 weeks. And it's just 10 names with a 10% position in each. It's the big 8 stocks plus Broadcom and Snowflake. So those are the 10 names that make up this FANG Plus index. We make our decisions based on the FNGS, not the FNGU, but we buy the FNGU to get the leverage. So we bought a 2% position in this is the same as a 5% position in SSO or a 3.3% position in SPXL or UPRO. So it certainly has some beta to it. So the bottom line on the day: second straight follow-through day on price, but not on volume. Volume disappointing, obviously, but all 5 indexes above the 21-day exponential moving average. And we'll take a look at the charts of the 21 over 21 and see that we had some nice gainers in there. So we're headed in the right direction this week anyway, for what they did. So not only keep an eye on what the stock did on the day, but also in the upper right-hand corner here, what it did on the week. And this is sorted in order of price gain for the day. So starting off with GE Vernova. This is a alternative energy play, worldwide exposure. Microsoft signed a massive deal with a private equity company to provide power for its data center. It's a massive solar index, a solar farm, and some other ancillary power sources. But this is certainly in that category that is going to be used to power these data centers, along with CEG and selected utilities. But GEV, very strong today, up 8% on the day, up 8.6% on the week, and breaking out of this little IPO base. Next up, First Solar. Bought it yesterday, added to it today, clearing this declining tops trend line, breaking out of this little shelf, up 7% on the week. And again, same theme. Plus, rates pulling back. Solars are they borrow a lot of money for their growth. And when rates pull back, solars generally benefit. Cava, one of the strongest restaurant stocks, making a higher high this week. Higher high close as well, up 4.3% on the week. Nice day today, up 5.8% after a harsh pullback there in the middle of the week. CEG, this is also alternative energy. You can see relative strength confirming this above average volume break out of this little declining tops trend line back to the top of this flat base. They report on May 9th, up 3.5% on the week. A lot of these just stocks were negative on the week until today. So wasn't all Apple today. Here's Bitcoin. I have this in here. It probably shouldn't be in here. It didn't count toward the return on the day, but you can see the long tail. So this looks like it's a shakeout below that 34 level, which was the low of 2 of the prior 6 weeks. And then closing at the top of the range, still below those moving averages. But certainly this is the way, if you want to finish a week, this is the way to do it. Up 4.7%, cutting the weekly loss to 2.5%. SE breaking out today, up 6% on the week. Generac, after a shakeout on earnings, regained most of that loss and back above the 21-day moving average, despite being down 4.8% on the week. You can see it held the 10-week here on the pullback. NVIDIA, up 1.2% on the week, undercutting early midweek, but regaining and making a weekly high close above the 50-day moving average. Freeport copper stock, nice day today, slightly down on the week, but reclaiming the 21. Coupang, near highs for the week. Micron regaining the 21. Robinhood, we got shaken out of this earlier this week, regained the 21 and the 50 by the end of the week. Sometimes you just get shaken out, and that's just part of what we do. Accept your losses, move on. Goldman Sachs making a new high, up 2.5% on the week. VRT, data center cooling, down 0.5% on the week, right near the top of this range, acting well since its earnings report. Spotify, regaining the 21 over the past 2 days. That 300 level is offering a little bit of resistance after its big gap up on its earnings report. Cameco, uranium play, flat on the day, down 2% on the week, but again, holding the 10 and 20 week moving averages. United Airlines, I don't like the relative weakness over the past 2 weeks. This will probably come off of the list, but it's a normal pullback relative to the 5-day move that it made after its earnings report. I'm just not real fond of airlines, and I know Dan doesn't like them either. GDX holding the 21, down 3.3% on the week. Raytheon, we're into the 5 names that were down on the day. Raytheon holding the 21, very tight action, very tight sideways action, but HWM will probably take the place of this in the 21 over 21 when we rebuild it over the weekend. American Express pulling back to the 21-day. Datadog has earnings next week, just below the 50 and 21-day, very tight action. And A-Lab looking so strong late last week. Not a good week, obviously down 9.5%. This one's a very wild bucking bronco, so size accordingly. The only reason we're still in this is because we've got a very small starter position. It also has earnings next week. Supposed key player, also from a semiconductor communication standpoint, in AI infrastructure. That's a 21-21 to wrap the week. It'll be slightly different next week. And that's going to wrap up the video. Revere Asset Management, our flagship portfolio named GROTECTION, because it's designed to grow assets in uptrends. Are we starting a new uptrend? We're trying to get back above this 50-day moving average. So grow assets in uptrends, protect them during weak or downtrending markets. You've seen our beta pull back over the last month as things started to top out and roll over, finding support at the 100-day moving average and bouncing off that level. And we've little by little increased exposure this week. Exiting the week with a higher exposure slightly than we came into the week on. That's how we do things here at Revere. If you like this approach, you can email me, don@revereasset.com, or my partner, Dan Stewart. If you're interested in becoming a client, dan@revereasset.com. The phone is 855-REAL-WEALTH. That's 855-732-5932. We're also loading these videos to YouTube and directly to Twitter or X. And I'll tweet them, and Ted and Connor will retweet them as well as Dan. So you can either watch it directly on X or YouTube or on our website. Or if you're on our email list, it'll get emailed to your inbox. And with that, I'm going to wrap up the video for the week ending Friday, May 3rd. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening, and have a great weekend.